You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and hello, beach friends. Long time no see. Today is Monday, August 10th, 2020, and we are thrilled to be with you. We are up at a family cottage today, having a great time. We're going to spend most of it at the beach, but got to take a little bit of time to connect with you guys to talk about what is the state of the Toronto real estate market. We are the largest and fastest growing podcast for that subject on iTunes, Spotify, and Google Podcasts, and let's face it, we're having fun. Myself as a broker, as an investor, I want to know what's been going on in our market despite and because of COVID. And so that's why we jump in every morning with such optimism about everything happening and looking for opportunities wherever they may be. So we're going to start off talking about July 2020 stats. How do they line up with past years? And then we're going to talk about this idea of people fleeing to the suburbs. You've probably kind of clued into that, and we've talked about that as well. But why are they moving to the suburbs? What do those trends and stats look like? And are we the only ones here in Toronto doing that? And are renters going to be optimistic or pessimistic about home ownership on the tail end of COVID-19? As mentioned, so excited because we're here up at the cottage having a wonderful time. I'm thinking today when I go to the beach, I might, sometimes just sitting on the beach in the sand can get a little bit tiresome. So I'm thinking maybe I can bring like a metal detector. Go out there, find antiques of great value. Beach better have my money. We're having a good old time, and you know me, even on holidays, I like to sit down and go through some good Toronto real estate stats. And so we're going to go through some of the highlights as we chew the cud, as it were, of July and figure out what is happening and what do the stats have to say. So here we go. We're going to start off talking from a Zoocasa article. The easing of COVID-19 restrictions across the province, coupled with pent-up housing demand, led to the record-breaking sales within the Greater Toronto region for the month of July. And as a refresher for any of you guys just jumping in for the first time, home sales in the Toronto region are up 29% year over year, which is incredible, given that we were down by so much in the beginning of the year. In the city of Toronto alone, sales are up 15% year over year and 26% month over month. This is a new thing. This is a new and recent increase in the month of inventory. Month over month in sales increases. We're going to get to month of inventory, by the way, which is one of the things I've been anxiously awaiting for. We're going to talk briefly about that today as well. And I love coming at the stats from different angles, and we try and figure out what segments are doing what. And the average home price across all housing types noted significant increases, rising 17% year over year. So that's to say, if you were invested in the Toronto or the GTA market a year ago, then you have seen a 17% increase in price. Not too shabby. And if you were in Toronto specifically, you're up 21%. Not too slabby. Not too shabby, short and flabby. All right. So let's get into a little bit more specifics here. Let's talk about different markets. So here's an article that's called Detached. Actually, this is actually the same one. It's just a subheading of the same article from Zoocasa. Detached house sales outside the city of Toronto are up 48% annually. And they break down some of the top performing markets, which I think is great, especially if you're in the GTA or considering leaving Toronto. Where can you go? Well, what's been going on? So they say this: sales growth was driven by low-rise home types, particularly in the regions surrounding the city of Toronto. And we're going to see that in the stats too, and why we can say that. But let's look at different markets. All right, so let's start in Durham region. Durham region, for instance, saw a steep 52% increase in home sales this July. I mean, it wouldn't be such a big deal if you had sales and you had the number of new listings rising at the same pace, but that was not the case. In fact, they had a 1% increase in new listings. So the number of sales are up 52%. The number of new listings are up 1%. Can you say tighter market? In fact, their sales to new listings ratio is up at a whopping 83%. 83%. 60% SNLR, that statistic would classify you as a seller's market. We're at 83 in Durham. And last year, they were at 55. So they were even balanced last year. So it just shows you how tight that region has become. And it's why it's one of the fastest growing price point markets in the GTA right now. In particular, detached home sales in Durham grew 52% annually, but new listings dropped 9%. So if you're looking for a segment out there in Durham, it would be in the detached market, which seems to be a common theme across all regions in our area. Because we're going to jump over to Halton region. You ready? Here we go. Halton. Home sales grew 38% year over year. There was a 43% increase in detached, so obviously outperforming the other housing types. But there was only an increase in new listings of 24%. 24%. Their sales to new listing ratio now, again, 60% makes you a seller's market. They're at a whopping 74%. And last year they were at 68%. So also a region that is going to continue to do good if the sales to new listings, if you don't get the new listings and the sales are continuing to rise at this pace. Now, is this a long-term trend? That's up to you to decide with your investment dollars. When we look at Peel, home sales are up 29% while new listings grew 23%. So still a little bit of a tightening, not as extreme. This year's the sales to new listing ratio at 66%, and it's similar. Last year was 62%. And obviously leading, when we dive deeper into numbers, Caledon is kind of carrying a lot of it, and Brampton follows that. So York region. If you're in York region, you're like, what's going on north of us here? Okay, well, 28% year over year, and new listings were up 14%. Again, a tightening. Sales up 28, listings up 14, tightening. They're saying the sales to new listing ratio is 56%, which is identical to last year. So they're still floating in a buyer's market, but they're edging towards a seller's market. But when we break it down by property type, detached home sales increased 37% annually. So detached homes are doing very well. For example, in King, they're up 154%. Sales increasing. That's crazy. Georgina, 74% increase. Aurora, 72% increases. There is no doubt, and we'll get there in a second talking about this, no doubt that people are fleeing Toronto. They're fleeing the main city to these outskirt communities. There's no doubt at all. And the stats are painting that crazy picture right now. Detached and semi-detached home sales. The detached sales are up 27%, semi-detached up 35%. And when we look in the city of Toronto as a whole, so now we're going to bring it back home here. The sales to new listing ratio, now if we were to map it out here, 40 to 60%, that's balanced. Under 40%, that's a buyer's market. Over 60 is a seller's market. Well, where do we sit in Toronto? Well, last year, we were at 65%. It was tight. We had a seller's market. This year, however, the city of Toronto is at 52%, pretty much smack dab down the middle. Buyer's market. And obviously, this isn't for every housing type. Every housing type is different, which is why we need to ask further questions, which we'll get to, on which ones are doing well and which ones are not. But when we look at freehold average home price increases, they were double-digit growth as well. We also had double-digit growth in the condo segment, which might come as a surprise because condo is what a lot of people are watching. So they say this, across the Toronto region as a whole, the average home price for detached and semi-detached properties increased 16%. Whereas condos, they saw price increases of 8% for townhomes and 9% for condo apartments. So not keeping up, but still pretty good. And I think this is where you can miss that there's actually a difference. If you just look at the price and the graphics of what it looks like from a price perspective, condos don't seem to be doing all that bad. They're still rising. They're just not rising as fast. And I think a big part of that is I don't think that a lot of the things that are going to happen in the fall have really set in yet. The affordability challenges, the evictions, and all of these things are going to hit them hardest first. That compounded by the fact that people want to leave Toronto, which is where obviously there's a lot of condos in these tighter urban markets. The city of Toronto average home price for detached and semi is up 26 and 20 respectively, but condos, they're up 7% and 9% for apartments. So 7% for townhomes. So you could say, you would be within your right to say that condos continue to lie at the bottom of the ocean, speaking of beaches, and they're like twitching. I guess you could call them a nervous wreck, right? So when we look at, one of the things I've been so anxious for, and this is the first indication of this, is months of inventory. It's so hard to find this stat. Well, Scott Ingram, he's got us covered. He's like a big fish out here making us offers we can't refuse. call him the Codfather, right? He's out here sharing with us different months of inventory. And where are condo months of inventory rising, or are they declining, or are they flat? Well, this is the first time I'm seeing it. And here's what the post says. Rolling 30 days of sales continue to increase for condo and freehold, combined with slower growth in condos or decline in freehold. That meant months of inventory dipped lower for both ownership types. So condos, he's saying, are at the lowest since April 14th, and freehold at the lowest since March 24th. So I'm not as interested about freehold because I know that's going down. We see that. We just heard that in the sales to new listings ratio and all of these stats that we have in the suburban communities. But what about condos? Are condos going up? Because the concern that I've been mapping the last little while is if it does go up, because when we look just even a few days back, we saw that it was climbing. Because it was up at 30, it went all the way down to 25, but then people started realizing in June, wait a minute, condos might not be so great, and it went up slightly from 2.5 months of inventory to 2.6. But what we've just seen from this post that he put out a couple days ago is it's actually come back down to 2.4. So if anything, it tells me that all things equal, no further interference with our market. Condos have kind of plateaued at their bottom of months of inventory, and they're not climbing up. I'm not so worried if they come down. Obviously, that means prices will go up, and is that a good thing? I mean, it depends if you want prices up or not. What I'm more concerned is if we get the months of inventory rising very quickly, which I think, as I mentioned a day or a couple days ago, I was saying I wouldn't be surprised if we've reached a bottom for prices for condos. Year over year bottom, I mean, not price-wise, because as we round into the wintertime, you're going to see prices come down. There's a big difference. There's a big difference between seasonal fluctuations and year over year prices. But if now, I've seen a couple stats, I've seen things seem to level out a little bit, but now we're also seeing months of inventory not climbing, which is what we would want to be watching, and that's what you would be seeing if prices were going to go down further. But it seems to be at a bit of a plateau, bit of a standstill. Yes, it's come down since COVID and it's gone up slightly, but it seems to have flattened out again. So something I'm watching, and it reinforces the thought that I have, which is maybe, just maybe, and the stats for this month will really tell in August, maybe we've reached a bottom for condos. So you guys better have your finger on the trigger. It might be time to scoop one of those suckers up, but keep in mind, from a winter perspective, you're going to have a bit of price coming down naturally. So let's look high level. How big was July? How big was it? Listen to some of these numbers. It was the third highest dollar volume month ever. The ninth highest transactions ever. Only one in the top 23 that's not April, May, or June. So obviously July is a unique scenario. And it's the highest average dollar amount of this for the second month in a row, because we've seen prices reaching new records twice in a row now. And the second lowest months of inventory for July, the 17th lowest in the last 25 years in general. So it's the second lowest months of inventory for a July month. So July, the fact that it was in July is what's a shock. It's what's setting new records. But even that aside, if you just were to compare it with all months in the past, it's still a solid month. Now, is this going to continue? I find this little chart that's in front of me here. It goes like this. It says, looking at Toronto's newly released charts, if you ignore all the months around it and how it goes there, June would pass as a normal looking month for sales. So what I'm looking at, if I were going to describe it to you, is the last 3 previous years, plus this year, where prices are. It's just strictly MLS sales. When we look at the activity, what we find is there was clearly in April, it was way down from normal. But as we start to see the typical, May, June, July sales coming down for the other months, we see it actually increasing this year. And it way overshot in July, way overshot. And so if I were just to kind of make it as a balance, like let's say all things equal, we're gonna have the same number of sales this year as we did last year, then what I'm seeing here is that overshot in July accounts for what seems like almost the full amount that we've seen up to this point. And we're going to see other stats too, but one of the things to keep in mind is year to date, our sales are actually not up. And actually, I'm going to leave that point for now. But before we go there, I want to look at a Better Dwelling article, because you know what they say, like wise Papa Fish once said to his sons, keep your friends close and your anemones closer. So let's hear from these guys. Let's hear what Better Dwelling has to say. And they're looking at obviously the benchmark prices. And I want to just take some of the highlights from what they have to say, because obviously it's Counterpoints. And they're looking mostly at benchmark prices. I find it so silly. The big point that I got out of this is when they put these little charts out, 2017 seems like the best year ever. And the reason for that isn't because they're not taking the average prices. They're actually, what they're mapping here is the annual percent change. Like, who does that? I'm going to show you a chart, right? I'm going to show you, my first chart I'm going to show you that shows the stats is either going to be, you're going to have your benchmark price increases, or what's your price. You're going to have months of inventory, maybe, right? You're going to have your average price. But what chart do they choose? They choose the Greater Toronto benchmark price change, the price change, the speed of the change. So they're really stretching to try and make it look like 2020 doesn't stand out as a stellar year. And of course, you guys know the price increases we experienced back in 2017 were crazy. And it would look as if there was a huge peak and it dropped all the way down. It's funny, we're all looking at the same ocean of stats, yet Better Dwelling is apparently, we don't quite see it in the same way. We all have different perspectives on the same pool of water. Let's see, the average sale price has an even bigger jump as well. Then there's this absorption rate they're talking about. And I love this connection between average sale price and we've got the home benchmark price index. The substantial jump is largely due to booming demand for detached homes, which saw sales volume rise more than 4 times the rate of condo apartments. You guys know a couple days back, we're talking about how that benchmark price is still good. It was like 10%, but the average price was up like 17%. And my first initial thought is, well, that's because it's the high-end homes, right? Like the high-end homes are obviously selling and it's dragging the price up, it's inflating them. But do they really need to be high-end homes? No. Think about it. They really only need to be detached homes or the larger type of inventory, right? Because if the condos aren't selling as much, which they are, but the smaller stuff is generally not selling as much. But the big stuff is not expensive, but big. Detached, semi-detached. If these homes are outperforming, you're going to naturally see a pull on the average price. And that is what's happening. And let's stop looking at average sale price change as a statistic. Can we just agree nobody cares about the speed of the change? If anything, 2017 was bad. Like, that's not good. You don't want excessive change speed. Right? So the city of Toronto represents 6930 of those listings when we look at the increases of new listings, and a massive 45% compared to last year. The suburbs didn't quite increase as much as sales, but the city's jump in new listings grew 3 times faster than sales. Here's where we got to be paying attention. This is the months of inventory. I'll read that again. The city's jump in new listings grew 3 times faster than sales. Basically, there's a lot more pressure on prices in the suburbs than there is in the city, which is actually seeing pressure released. Talking about the city of Toronto. Again, take it with a grain of salt. Better Dwelling has a way of spinning these stats, but it is important to note before we get into why this is happening and the trend that's going on and those types of things. It's important to note that the suburbs are clearly outperforming the city. And you guys know that because you're smart. But this, choking out over here. But this last bullet, I'm going to read the whole paragraph because I think it's solid. It's probably the best part of this article. Here it is. Greater Toronto is following a current North American-wide trend. You think we're alone? Nuh-uh. Flight to the suburbs. There's been a surge of real estate sales, and this is due largely to the detached suburban segment. Suburban inventory is becoming significantly tighter than last year. Meanwhile, in the city, sales are rising, but not as fast as inventory, which is growing at 3 times the pace. It's important to remember year-to-date sales are down. This is what I was talking about. Remember, sales are down year-to-date. So this may be a demand lag from pandemic months. Of course, leave it to Better Dwelling to point that out as a stat, but I think it's important we know that too. It's important we know that year to date, our sales, yes, monthly it's up, year over year it's up, but we have not yet caught up to the lag that we had. So is there more in store? It's depending how you look at that. Does that mean there's more to come? Or does that just mean there is a lag, as they say? The rally may disappear as demand catches up, but in the meantime, there's still a lot of pressure on prices, especially in the suburbs. Guys, don't feel like because people are leaving Toronto that this is a Toronto issue. It's not. It is not. CNN just put out an article talking about this. Manhattan apartment sales plunge while the suburbs boom. It's not just us. In July, signed contracts from condos in Manhattan were down 56% from last year. Imagine if condos were down 56% in sales. Is that Toronto? No, we're actually way better than that. And co-op apartments were down 57%. The stats in most communities, most main cities are down huge. Manhattan is a perfect example. But Toronto is down, but it's all relative. Are we weird for having people run to the suburbs? Not at all. They say deals for homes in the suburban areas of New York City surged. Pending sales for single-family homes were up 41%. They were up 73% in Westchester County, New York. They climbed 112% in the Hamptons. They were 121% higher. There is actually a huge discrepancy. In fact, Toronto, if you were to compare them based on what I'm hearing here to New York, from the inside of the city to the suburbs, we're actually holding up quite balanced. We really are, because we are not seeing 50% drops in sales. We have rebounded in a way that only the greatest city in the world could do. All right. Here again, I'm going to throw some more stats, little fun stuff for you. Kind of mix it up a little because those are very number heavy. So we're going to add different angles to this, which is great. I saw a little, they had this little questionnaire thing John Pasalis put on his Twitter. There was 969 votes, just to give you some context. Again, these big poppies in the sea. So given what we know today about the economy, he asked the population, the housing market, mortgage arrears, monetary and fiscal policy, etc., in what direction do you think home prices are likely to be headed by the fourth quarter of 2020? Let me ask you, do you think it was going to continue to rise? Do you think it's going to level off or otherwise be flat? Or do you think it's going to begin to decline? Well, here's what they say. The winning votes was actually begin to decline, which was 38.7. Followed next was a leveling off of 31%. And then the last one was continue to rise at 30%. So if you were to just take out continue to rise, that's to say that 70% of people believe it's either going to be no growth or begin to decline. That's a poll that was taken with quite a good response rate. So if you're feeling like I'm a little nervous right now, well, people were nervous a couple months ago, but I think it's a little more justified right now, personally. And you're not alone. You are in a big sea of fish that agree with you. Scott Ingram, he posted something which actually I received an email from Kriya, which is probably what he just shared. He just kind of copy pasted it. Listen to some of these stats. People on realtor.ca. Are people using that website? Is it growing? Well, it is. And off the charts. When we look compared to last year, there was 10.7 million unique visitors. This is across Canada, which is up 46%, almost 50%. And there are more than 447,000 leads, a 51% increase. This is to realtors that realtor.ca sends leads, and an 18% decrease in inventory. So more people are looking and there's less stuff to look at. Guys, we have an incredible market here. We really do. And as much as I like to look for opportunities in the buying market, the reality is when you compare us against global markets, we stand out. We are stellar. What an amazing place to be invested. I love it. And just a side note, just to keep things humble here, better dwelling. Canadian households see almost a year of net worth gains wiped out. They're talking about Q1. These guys still all the way back in Q1, but they're looking at the stats that came out of Stats Canada, saying how the net worth saw a big drop. And there's the largest since the Great Recession, was big enough to wipe out almost a year of wealth gains. And that's why we need a wealth tax. Do we get a wealth rebate? Because that would have worked out really well in Q1. Of course not. Wealth tax is a terrible idea. All right, let's get into our final topic, renters. Renters. Maybe you're a landlord, you got some renters, and you're wondering, are they going to leave me? Don't leave me. I let you defer your rent. Don't leave me. Right? Maybe you're a renter and you're trying to decide, are people thinking about buying? And a couple days ago, I can't remember which article, probably Better Dwelling, right? They're probably the ones that said it, but a lot of people are saying, I'm pretty sure it actually was them, from a Mortgage Professionals Canada survey, that there's likelihood of buying has gone down. That was what that article said. Well, I don't know where these guys got the same publication, the same survey with different stats, but the Star obviously has a different take on it, because here's what they say. This Mortgage Professionals Canada survey reads, it shows that among non-home owning Canadians, the number who expect to purchase in the next year doubled to 14% this summer. Non-home owning Canadians, renters, people who don't own a property, they doubled. Compared to only 7% at the end of last year, they're at 14%. The study also found that more than half, 54% of homeowners who elected to defer mortgage payments during the crisis weren't in financial distress. So obviously they're financially strong. And the other side to this that I thought was really interesting, that, again, paints light on my perspective that maybe the mortgage deferral thing isn't something we should be too worried about. They say this, banks have indicated that up to 16% of mortgages are in deferral, but only 5% of MPC survey respondents is expected to have difficulty making their payments. So the majority of those opted for it when it wasn't needed, or they've resolved it. 72% of homeowners said they would have no difficulty making their payments, and 23% anticipated, quote, some difficulty. So we're going to have 23% having a little bit of a challenge catching up. But I do think, unless they get wind of these stats and they're starting to think maybe it's not needed, I do expect that they're going to have mortgage deferrals continue. The research shows the pandemic has hit renters hardest as they are younger and less securely employed. And that is true too. You can have it both ways. But at the same time, when there's an opportunity to jump into the market, or people are now a little more willing to go further away from the city where it's a little more affordable, maybe that's the route. And maybe that's what's creating this opportunity for people to buy in the market where they never thought possible. They have a buttload of stats here. I'm going to read you some of them just for fun. Research for the Ontario Real Estate Association found that 61% of survey respondents were interested in moving to the suburbs or more rural areas, but only 34% were interested in living downtown. Again, there you see that trend, right? Among homeowners planning to buy another home within the next 3 years, 38% said their current dwelling was no longer suitable in terms of size or location, and only 14% of renters gave that as their reason for planning to buy. So renters, they don't care about the size or the location. They care about home ownership. And the people who do own are obviously getting really picky, thinking, why don't I go find something a little further out with a backyard where I can let my poodle run around and jump in I don't know, I guess a pool, a doggy pool. People treat their dogs like kids, so I guess you could buy a pool. My dog likes to swim. Among those who said they plan to buy because of their current home's unsuitability, 17% of homeowners and 24% of renters cited the lack of home office space as the reason. Whatever the reason, guys, this is the trends. People moving out, not wanting to move in the city, but at the same time, renters, as this is kind of our topic, are becoming more optimistic about getting into the world of real estate, which is a great thing. That is a great thing. Let's hope that the government doesn't step on that or squash their ability to have affordability, their ability for affordability, by adding all of these rules. And in the attempt of trying to make it easier on them, they're putting pressure on demand, which is spiraling in the way of increasing prices so quickly that maybe this dream will end. So not only is this a great time for you as a renter to find yourself a good rental space, because there's a lot of pressure, it's also a good time for you to be considering home ownership. And wherever you fall on that, I encourage you guys, if you have any questions, feel free to reach out. We're here as investors and as a realtor, a real estate broker myself. I am happy to help and answer questions. Any comments you want to leave in the chat as it relates to our market and what's been going on. I hope you guys have a wonderful day. I'm just going to be out there beaching, I'll be out there tanning, getting my foot tan or whatever. Speedo. I don't wear Speedos. I'm not that confident, right? But if you want to get a hold of me and you want to reach out to me and my fishy friends, feel free to drop us a line. I'll see you guys next time. Take care and keep it real.